Okay, Mayuresh Joshi from Angel Broking as well joins in with his take on the markets. Mayuresh, hi, good afternoon. Just analyzing what could have gone wrong with Jet and considering the amount of hit that they've taken on the international operations, what explains this PAT slide of 91%?
I think it's the results, Ash, and largely if you look at the breakup within the results component, the other income has let them down significantly, and what it has led to is that the yields have come down drastically, and the realizations also. So to that extent, the kind of tie-ups that they've done in terms of packs should be accretive over a longer period of time, as well as the measures that they're probably taking on the cost front, excluding the ATF prices, which is beyond their control. But to a large element, I think the stock had moved up significantly over the past few months. So the results, along with disappointment in terms of yields, were one of the major reasons for the sell-off, in my opinion.
Right. Mayuresh, let's talk about the telecom space. What's the view out there, especially on Reliance Communications? I know the view is slowly changing on Bharti as well because of the African business and how the prospects for that business may look up. But what's the positioning on Reliance?
So I think Jio would probably benefit over a longer period of time. I think what's happening with the sector and in terms of the IUC cut, the EBITDA hit is going to be very, very evident in terms of Q3 numbers. But to a large element, as you rightly mentioned, the African operations for Bharti probably have held in good stead. And what you're probably talking about even in terms of the other markets within Africa, Kenya, Rwanda, Tanzania, if they're able to get out of those markets, I think the value accretion on the margins will be significantly higher. The data consumption at 784 billion megabytes is significantly higher. So I think the key parameters that one talks about in terms of maintenance of RMS and SMS share for Bharti still holds good, with minimal churn happening on that front. Debt, leverage, ROC is coming down to 5.1% for spectrum cost, OPEX expenses is something that will continue. But to a large bit, I think the hold rating on Bharti continues. Jio largely benefits over a longer period of time as new subscribers start coming through, both in terms of the circles that Vodo Idea probably needs to cut down from. And again, with the packs and the kind of pricing that it is put through, I think the RMS share will be quite significant. So the kind of capex that they've done and the back-ended returns over the next few quarters that can accrue can probably start holding the telecom piece for Reliance in a good position over the next few quarters.
Okay, those are the closing strategies. 10 minutes to go before we wrap up the session. Among the NBFCs, what would be your top two ideas right now, Mayuresh, irrespective of valuations?
No, again, valuations are very important and critical, Tanveer. So largely, I think the entire pack has moved up. So within the large cap names, if I have to put it, Bajaj Finance has moved up significantly. But the management, again, is very, very hopeful in terms of generating a 15-20% AUM growth. And what this probably does is increase and quantify the bottom line and top line quite significantly. But again, I think if I have to pick and choose within NBFCs as a larger basket, my own sense and conviction still lies with rural-focused NBFCs. So M&M Financial on declines is still something that I'll continue to prefer. GNPs have definitely gone up at around 12.5% on a 90-day reporting basis, but they're still expecting credit costs to get contained around 1,100 odd crores. AUM growth around 13-14% and consistently maintained. And largely, again, I think the NIM expansion has been evident because the cost of funds has fallen far more sharply than the fall in the yields. So again, I think M&M Financial on declines is something that I'll continue to prefer. And within the housing finance name, any decline on the stock on the GIC Housing looks very attractive because the management has made very, very clear that over the next 2 years, they're expecting a 25% loan growth. What this translates as significant NII growth. NIM should expand to 3.7 because a large portion of their bank borrowings has gone down to 55%. And to that bit, I think the ROE expansion to 1.9, ROE to 23 odd percent, and sharp recognition of GNPs, which are significantly on the books, should probably start emanating results. So GIC Housing also remains one of my top picks. But valuations at 1.9 price to adjusted book seems reasonable.
Okay, that's a reasonable valuation according to Mayuresh for GIC Housing. Mayuresh, one more question to you and a short answer to that. Auto space, which one two-wheeler stock which you would say is a good bet according to you from a long-term perspective? And when I say long-term, I'm not talking from 3 to 5 years, I'm talking from 1 year perspective. And a four-wheeler stock, but not Maruti. M&M, Tata Motors or any other stock of your choice. So two stocks and a short rationale why you're saying to buy that.
So you've restricted the options in that. But largely again on the two-wheeler pack, any sharp decline on Hero MotoCorp, in my opinion, still becomes a very reasonable bet. Strong volume growth still expected in the second half. Margin should sustain and the earnings growth should be very, very evident. If I have to leave aside Maruti, my own sense is that Tata Motors is available at a very attractive valuation at this point of time. The preceding quarter had a very good set of numbers, and if one really assumes volume growth to probably just contain themselves over the next few quarters, margins probably to remain stable, and again I think the overseas performance, including their Chinese JV, to keep on performing, I think it looks like a very reasonable bet as well.
Important insight coming in. Mayuresh, your closing thoughts on how we should be approaching the coming week?
It's going to be
Insight coming in. Mayuresh, your closing thoughts on how we should be approaching the coming week?
It's going to be a news-heavy week, Tanveer, and largely I think what happens in terms of Fed comments and statements thereof are going to be very, very critical. End of next week, you'll probably be looking at exit polls for the Gujarat elections. So largely I think the markets are going to probably stay in a range. And even if the Gujarat elections do come in line with expectations, my own sense is that you're not probably going to see a huge spurt in the markets. You might see a positive sentimental push through happening on the indices. But largely I think it's the earnings that will do the talking. So the indices, in my opinion, are stuck probably in a wide range, if you can define that, between 9,900 to 10,400, 10,500. But I think it should probably start staying in this range over the next few weeks. And as the results start coming through, and if there are better numbers as one really expects in Q3, you might have some earnings upgrade which might re-rate the markets.
Right. Thanks, Mayuresh, for joining in with that perspective. Dr. Narayan, how should